Hello, and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm speaking with Phil Flynn, Senior Energy Analyst for the Price Futures Group and the Fox Business Network. Welcome to the podcast, Phil.
Thanks, Mike. It's great to be here again, and it's such a critical time for what we're going to be talking about today, right?
Yeah, geez. I mean, obviously what's going on in the Middle East is a tragedy on so many levels. For the purposes of our conversation, just to try and stay focused on its impact on the market. I mean, you've been following energy for decades. What are your thoughts on what's going on out there? What's your interpretation of where things stand and what it's going to mean for the major energy markets?
I mean, let's make no mistake about it, Mike. This is the most significant risk to global supplies probably since the original Arab or oil embargo. And the thing is, we don't know what's going to come next, right? If the war stays contained within Israel, which is unlikely at this point, then more than likely there's going to be no impact on oil. But I mean, if you look at the big picture, the ramifications of how this thing could spread, it's going to be very dangerous to try to bet on oil prices going down. But believe you me, people are going to try to get prices down. We saw, for example, from the Biden administration, hey, if you can't get oil from one dictator, call the other dictator down the street, And suddenly, we get these headlines that the Biden administration says, hey, if we can get free and fair elections, we can let Venezuela sell their oil and release some sanctions, release some oil. How's that going to work out? Mike, I mean, did that work out with Iran? Did appeasing Iran and turning a blind eye to sanctions make them any less likely to sponsor terror or act badly? And so, I think it's naive to try to think that Mr. Maduro in Venezuela is going to hold a free and fair election, especially because if they did, we know he'd be out of power.
Well, without trying to get too deep into the history lessons here, I mean, most people know there was an Arab oil embargo in the 70s. We saw significant impacts here in the U.S. Is this a similar type situation that we have to be concerned about, Iran pulling the strings on that front or doing something drastic on the supply front or a second front in Israel, for that matter, through Hezbollah?
Yeah, I think, we have to worry about another front in this war opening up. I don't think Iran's going to take their oil off the market. I think there's a bigger risk the world is going to take Iran's oil off the market. You get to a certain situation where you're going to find that if it's proven that Iran had a direct role in planning this, horrendous attack, how can any civilized world, country in the world do business with these guys like nothing happened? They're going to have to shut down. The Biden administration is going to be pressured to put the pressure on, and they haven't done it so far. They say, oh yeah, we've been enforcing sanctions. No, they've been trying to get back into the JCPOA nuclear deal that was done under President Obama, that everybody said was a big mistake. Even the Obama officials did, when it was all said and done, that it was a flawed agreement. But to do that, they really had to try to negotiate with Iran and their hardline leader right now, who really doesn't have anybody's best interest at heart. So I think at some point they're going to have to crack down on Iran's oil. They're going to have to take it off the market. And they have to crack down on the people that buy it, and that means China, that means India, other people that are not going along with the sanctions. It's either go along, you're either with us or against us. And if you're against us, be prepared to pay the price.
Well, let's talk about some of the differences or what the U.S. has, I guess, hopefully in its back pocket from a supply standpoint. I mean, versus, what happened back in the 70s. I mean, we obviously are much, the production increases that we've seen in the last few years, what's happened here. Does that help us at all? Does that give us a little bit of sort of a domestic capacity shield against supply threats on the global market, or is that really overblown?
No, it gives us a shield, but it's a shield that we threw away, right? I mean, it's a shield that could be a lot bigger and better and stronger. Yeah, everybody is touting the fact, oh, look at this, oil production hit record highs, and, the production is doing great. And that's true. The U.S. energy industry has done a great job doing that, but it's not because of the Biden administration's green energy policies. We're not producing more oil because they killed the Keystone Pipeline. We're not producing more oil because of drilling moratoriums. We're not, producing more oil because they told the banks to stop lending money to fossil fuel companies. No, they're producing more oil because they made these investments. When Donald Trump was in office, they're producing more oil because they're the best in the world. And the sad part about this is that I honestly believe that if they weren't being thwarted by this administration every step of the way, we'd be producing 4 million barrels or more a day more than we are today. And if we were doing that, I can tell you this, Iran would be acting a lot differently. I could tell you that Saudi Arabia would be acting a lot differently. And I could tell you Russia would be acting a lot differently. In fact, I still go back, to the pullback on U.S. energy production is one of the reasons why Putin moved when he did, right? Because he knew he could control the oil, and that was his ace card economically. It's like, sanction me all you want, but if I take my oil off the market, you guys are in trouble because the U.S. stopped producing.
Let's talk about Saudi Arabia since you brought them up. Obviously, the OPEC plus, the production cuts we've seen, that the Saudis are leading the charge there with that this year. How do you see that unfolding? I mean, I guess they're in place, through the end of the year now. I'm just kind of curious as to what you think is going to happen when New Year's rolls around and we see what happens in 2024.
We're already seeing signs they're going to extend it into the new year. And why wouldn't they, right? Because right now, the prices that they're getting is reaping them billions of dollars. It's at a price level right now where it hasn't significantly slowed down economic growth. And I kind of rip my hair out, when I see, reports like, demands, in China is really bad. Their economy's terrible. And then, in India. And then I look at their numbers and it's like, what are you talking about? Their demand's at a record high. They're running the refiners faster than they have. And thank God they're having an economic slowdown, because if they were going halfway good, we'd be totally out of oil because we wouldn't be able to do it. So there's this misperception about how tight global supplies are. And I think we're tighter than we've been probably in my lifetime. And I don't think there's a lot of room for error. And right now, it looks like the biggest amount of spare capacity in the globe happens to be the OPEC Russia cut. So even if you take them away, we still don't have that much cushion. And that's why these markets have been so volatile. And that's why we've seen these prices hit the highest level since the Russian war, and why there's a huge risk that if things go wrong in the Middle East, they could go a lot higher.
Yeah. I'm glad you brought up the demand picture, because I had seen some of the things you said, that the Chinese demand slowdown story is overblown. What about the talk here of demand destruction, U.S. gasoline demand and things like that? I mean, are you seeing anything like that? Do you think that's overblown as well?
I mean, if you could get reliable data on a regular basis, I could see it more clearly. But, you look at the data, and there's good data out there, don't get me wrong, but it's all over. It's very volatile. If you look at U.S. gasoline demand, 1 week it's 8.8 million barrels a week. Oh, next week it's up 600,000 barrels. What? We're down 1 million barrels a day. Everybody, held up their cars. It's head spinning the way that things are happening. Listen, we know the U.S. consumers hits a pullback when we see a price spike on gasoline. We saw it, in California, hit $7 a gallon at certain places. People drive less because there's a sticker shock there, right? But then you look at the strength of the U.S. economy that everybody said was going to be in a recession. It's still humming along. You look at the unemployment rate, even though it's not as strong as it was, it's still at a historic low. You've got rising interest rates, right? That takes more money out of people's pockets, right? So they have a tendency to spend less. But if you look at the overall trends, I think considering that they've thrown everything but the freaking kitchen sink at the U.S. consumer, they're hanging in there pretty good. Now, I don't know about you, but do you see a lot of Teslas driving around? I mean, there's no doubt electric cars are taking a bigger percentage of the pie. But is that sustainable? I mean, is that going to continue? And the answer, I think, is it's going to have diminishing returns, right? Because there's not a lot of people that can drive an electric car. You just can't. The technology doesn't exist. and the reliability of trying to charge these cars. You can't do it. Even our poor energy secretary, did you hear about her little cross-country trip in her electric car? Jennifer Granholm, nice lady. I know people that actually work with her and know her. But, she's talking about, I'm going to show my cross-country trip, and I'm going to show how you can drive an electric car from sea to shining sea or wherever she was driving. And they were running, they couldn't find charging stations enough, right? So what they did is send one of their fleet fossil fuel cars ahead to hold the space at the charging station. So when Jennifer got there, she could charge her car. I mean, or, just to see how ludicrous this is, right? And then what happens on your electric car? Let's say you run out of electricity in the middle of the road. Who comes to save you? Ghostbusters? No, it's not Ghostbusters. It's a diesel generator, okay? They're going to come out of the road and charge you up in the middle of the road. And if people thought about, if you get into a big snowstorm like in Chicago and the batteries, and you're stuck in a traffic jam for hours or days, you're going to have cars all over there. These electric cars are going to be dead that you're going to have to tow out of there. So they're not ready for prime time. Are they going to take a percentage of the demand? Maybe a little bit, but I wouldn't write the epitaph just yet for the internal combustion car just yet.
Well, it's interesting. I know that the tentative sort of placeholder, you're going to be joining us at our Sarasota symposium, was about transition lunacy, I think is what you were talking a little bit about.
I think it was. Right.
Transition to this sort of new, non-fossil fuel world. And I guess it's safe to say that there's a few hiccups along the way, and there's probably some things we could be doing better, right?
Well, there is, and, I don't want to sound like I'm a prophet or a seer, but, we go back to the money shows. I've enjoyed talking to your audience. They're the best in the world, most brightest, smartest. I love those guys. I love to do it. I wish I could do it more. I just get so busy. I don't get to as many shows as I like. But, the one thing that we've talked about for years, and it's not like it's developed overnight, and even, prior to Donald Trump, is our concern, about, energy complacency, right? This is one of the things that I hit home. And years ago, when gasoline prices were low and everybody's, getting bigger and bigger cars and nobody cared, I'm like, we're on the verge, and I think that was one of my presentations years ago. We're on the verge of an energy crisis, a coming energy crisis. And a lot of people couldn't see it coming. It's like, no, we're fine. We got fracking. We'll keep oil prices below $30 forever. No, we weren't making the type of investments that we needed, 30 years ago. In fact, discoveries of new oils, even when times were good, we're like at the lowest level since 1947, because there was this fake idea that, oil was going to be cheap forever. We're moving to, demand was going to peak out and we wouldn't need it. Didn't work out that way. And I'm afraid it's not going to work out that way in the future.
Well, in the limited time we have left here, I guess, just from an investment standpoint, I mean, we've talked a lot about the big picture, some of these issues that are out there. Are there particular subsectors in the energy space that you find very attractive or not attractive here? Any stocks, ETFs, a couple of names that you wouldn't mind sharing in this kind of venue?
No, not at all. I mean, I listen, I'm a big believer, in the oil ETFs down here. I don't like the way they do the roll on that, obviously. And so that's good. But one of the ones that I like off the beaten path that struggled a little bit, but I think could do very good, is CVE Cenovus. Okay. It's a Canadian oil firm. It's integrated. They're making money hands over fist right now. And once they pay down their debt, which we're pretty much done with, I think things are going to really be happening for that company right now. Right. ExxonMobil, of course, just brought the big pipeline company. And so I think that ExxonMobil is one of my long-term ones. And like the Wall Street Journal said about their purchase of Pioneer, I think the purchase of ExxonMobil of Pioneer is telling you very quickly that fossil fuels are here to stay, right? They're not going anywhere anytime soon. So those are the two that I really like off the top of my head here.
Well, Phil, really, thank you so much for your insights on the energy markets. I know you've been following them forever. Thank you, everyone who's watching. If you'd like to hear more from Phil, we've got dozens of other top trading, investing, economic experts joining us at the Investment Masters Symposium. That's in Sarasota, Florida, from December 4th to 6th.
And they're going to sell out my booth, so you better get there early. If you want front row seats, just remember, I told you.
All right, you heard it here first, guys. Thank you so much, Phil. Have a great
Thank you,
day.
buddy.
Everybody else, we'll see you in Sarasota in December.
Thank you so much. Have a great time.